Welcome, friends, to the Probate Nation Show. I am Richard Ruddy. Our show this evening is about how to properly prepare the Virginia Estate Inventory. This is the very first document you will file with the Commissioner of Accounts in the course of your probate train journey as the executor of an estate. As we start this discussion, I am reminded of a famous golf expression called the mulligan. A mulligan amounts to a do-over of a bad shot in the course of your round of golf. Legend has it, the term was named after a locker room attendant named John A. Buddy Mulligan, who worked at a club during the 1930s and was known for replaying shots, particularly on the first tee. I know the feeling. In our show tonight, you will learn how to properly complete this initial filing and get off to a good start with the Commissioner without the need for a mulligan. And to lead this discussion, we are pleased to have Brian Lowell from Grinnings & Low to walk us through the preparation of the inventory. Let me tell you a little bit about Brian. Brian is co-founder of Grinnings & Low, LLC, a Fairfax City accounting firm founded in 2014. This firm specializes in Virginia inventory and accounting filings submitted to local Commissioner of Accounts for Virginia estates, trust, and conservatorships. Prior to forming Grinnings & Low, he worked as an auditor for the Fairfax County Commissioner of Accounts for several years. Please welcome Brian Lowell. Hi, Brian. Good to see you again.
Hey, Richard. Thanks for having me.
It's nice to have a chance to talk about this topic, which I know you're intimately familiar with in your years of service to the Commissioner of Accounts. Let's take a look at the estate inventory form for just a moment. The top part of that form has a whole bunch of information that might seem kind of overwhelming, but I think we want people to understand that really all you really need to complete this form is your certificate of qualification, which you got when you qualified at the local probate office. With that information and things you know about yourself, you should be able to go ahead and get that first part of that thing prepared. Brian, tell me a little bit about what's the purpose of the inventory form to be filed by a duly qualified Virginia executor?
So the inventory is the first step in the accounting process for any fiduciary that's court appointed in the state of Virginia. It is your representation as fiduciary to the court and to those interested parties regarding the assets of the decedent that you will be overseeing and administering. It includes identifying information for each asset that's being probated, along with the values at the date of death for every asset. And this is part one. So once you file this inventory, you will then be required to file accountings thereafter that document and record the transactions and your administration over those assets.
So does the value reported on the inventory form, which has 5 parts, and we're going to get to those individual parts in a second, does that need to be, when we file the inventory form, do those values have to be supported by any statement showing where you got the value?
So the answer is no. The Commissioner's office that receives your filed inventory does not verify the value of the assets. The Commissioner's office does not verify that those were the only assets or that those are even the proper assets. This is primarily and chiefly and solely your representation to the court about what those assets are and what those values are. So if you get a value wrong, it is possible to adjust it later. And there's several ways you can do that. We can talk through what that looks like as we go through the form.
Sure. So what we want to do with the show tonight is to show our audience exactly how to report each item on the inventory. So let's begin with part one, page 1, part 1 of the inventory form. Okay, so we show that on screen, and let's begin to kind of take apart, the different types of assets. So let's talk first off. What type of assets are actually reported here in part 1?
So in part 1, as the title on the section describes, this is the personal property of the decedent. So this is the personal property the decedent owns solely. So not property owned by anyone else or co-owned by anyone else, and not real property, so not real estate. This is literally everything else that the decedent owned, which should be the bulk of decedent's estate in terms of the quantity of assets.
So in addition to real estate, what assets in the name of the decedent are not included in part 1? That's all those joint assets, those are excluded?
Any asset that's jointly owned with someone else or that may pass to another upon the death of the decedent. So any kind of certificate of deposit or IRA or 401k, jointly owned accounts, those get reported in a different section on the inventory.
Okay. And again, what value should be assigned to these assets? How do we pick the value?
Those assets, the value for those assets will be the date of death value. So whatever the decedent owned, whatever it was worth when the decedent died, that's what you're representing to the court, the value of their estate.
Okay, and then what type of detail should be reported for assets listed in Part 1? I'm just going to start with Part 1. We'll get to the other parts later.
So it depends on the asset. There's certain rules for each type of asset. But essentially what you want to show is sufficient information to clearly identify and distinguish that asset from any other asset, as well as the actual dollar amount of that asset.
All right, so we're going to let's kind of break down these assets, kind of go through one by one, at least most of what I consider the common assets. So let's start with bank accounts. Now, up on the screen, how should checking account and savings account and market money accounts be reported? And we put up on the screen an example, and let's talk through how those things should be reported.
Sure. So any cash account, any account that's chiefly and only cash, so savings accounts, checkings accounts, CDs, money market accounts, all those accounts should be identified by showing the name of the institution, the type of account, and the last 4 digits typically of the account number. That clearly identifies and distinguishes that account and that asset from any other asset.
So the next one we're going to take a look at, and again, pull up on the screen, is certificates of deposit with the bank. So how should these CDs be reported? And we're showing on screen now what we would do.
So the extra piece of information with a certificate of deposit is usually going to be the term length of the CD. So whether it's a 48 month, 60 month, 3-year, whatever CD, again, you want to show the name of the institution, the fact that it's a certificate of deposit, the last 4 digits of the account number just to distinguish it, and then the term of the CD.
Okay. All right, the next asset we're going to talk about and coming up on screen is brokerage non-retirement accounts. So up on the screen, we're going to show a brokerage account as we would suggest it be reported. Tell us about how a brokerage account that's not a retirement account should be reported here.
So a brokerage account is usually where people get tripped up because oftentimes the temptation is just to show the actual brokerage account and the sum total of the value. What you really need to do with brokerage accounts is show the individual assets that make it up. So that could be the cash account, the sweeps account. That's going to be every individual stock. So you'll need to show all the underlying assets, showing both the name of the asset, the number of shares of the asset that are held, and then the current market value, again, at the date of death for that asset. Okay.
And a lot of times you can probably get that prepared by the brokerage house so that you actually can get a statement which you could attach and reference if you wanted to do that. Is that true?
Yes, and we recommend that to most clients just to make it easier instead of having to try to do some math to figure out what the date of death shares were and what the price per share was on the date of death. Just have the brokerage house run a report for you. It'll cost you some money, but it's worth the investment.
All right, so the next asset we're going to talk about is individual stocks, which we're pulling up on screen, and show how should these individual stocks be reported here.
So it's going to be similar to the description with the brokerage account, except now you're not part of a larger account. Maybe these are certificate shares. Again, you want to just show the company that's invested. You probably want to show if there's a special class to the shares, what class they are, if that distinction is relevant, and then the number of shares, the price per share, and the total value of those shares on the date of death.
Okay. All right, so the next asset we're going to talk about is retirement accounts. Now, typically retirement accounts have beneficiaries would name somebody, so we're assuming in this situation somebody forgot to name a beneficiary, so the account is payable to the estate, okay? It has its own set of assets. Tell us how the retirement accounts should be reported here as well.
So retirement accounts are going to be the same as a general brokerage account. You're generally going to show, usually there'll be mutual funds or some other target date fund that might be there, but you're going to show the number of shares for that fund, the value as of the date of death. Again, you want to go to the to the custodian of the 401k to get that valuation report. You will want to show whether it's a 401k or an IRA. So again, the type of account is part of the identifying process.
Okay, and it's important so we avoid confusion. Excuse me. The date of death value for a retirement account is not really relevant for tax purposes at all, but it is relevant for purposes of reporting on the inventory form. So just so clients don't forget. All right, life insurance proceeds. I have a life insurance policy. Again, normally you would have a beneficiary name. Someone does not have a beneficiary. The default is typically going to be the estate. Tell us how life insurance proceeds get reported on the inventory form.
So this could kind of depend on the type of life insurance that you have. Typically what you would show is the name of the company. So you might show Prudential. You'll show the last 4 digits of the account number for the policy. And then you'll say, what's the death benefit if it's if there is a death benefit, if it's a term life insurance, then you might show, what you expect to be the income for, let's say, 12 months as the value for that asset.
Okay. Okay, so everybody has an automobile and boats, or not everybody has boats, but certainly has automobiles. So we have these assets, and again, there's no POD on the title, so it goes to the estate. How are autos and boats reported on the inventory?
For vehicles like boats and automobiles, what you want to show is the year, make, and model. That's typically sufficient in order to identify the assets. In case of collectors of automobiles, you might want to add color if that helps to distinguish certain vehicles, but it's usually not required.
Okay. All right, so someone's passed away, and sometimes they may have a series of uncashed checks, refunds, dividend checks, et cetera, that didn't get direct deposited, that are sitting on their desk. How should the uncashed checks be reported?
Typically what I tell people and what we typically do is report the source of the refund. So it could be a utility company, and then you would show the date of the check and then the amount of the check, and that's usually sufficient. And then obviously that it's a refund check. Okay.
All right, next thing, we're sort of getting down to the bottom of our list, household furniture, clothes, and other intangibles. How is all that to be reported?
So this is where I see a lot of people get tripped up as well. Anything that's tangible, if it has a nominal value or very little value, you can typically aggregate it together under one entry and call it tangible personal property. Typically, most people will report $500 for that amount. Anything that is in and of itself worth more than $500, you are required to identify separately and list and itemize. So jewelry, particular artwork. It really just depends on the type of tangible property. You at the end of the day, you want to make sure you're identifying it clearly and distinctly so that a third party can to know what you're referring to, and then make sure the valuations again are supported by either a estate appraisal or some fair market value that is reasonable.
Okay, we seeing more and more probates involve the probate of guns. Mm-hmm. So how should guns be reported on the inventory?
For the gun, I would show the make and the manufacturer of the gun. I would show the caliber of the gun and the type of gun that it is, and then I would show a reasonable estimate of its fair value, which you might require an appraisal and most likely will. Okay.
A lot of people are maybe waiting to receive inheritances and then pass away themselves. Okay, so sure. How should any inheritance that I'm going to be receiving be reported on the inventory form?
So this happens sometimes. You may not know how much is to be expected from the estate. That other estates might still be mid-administration. So what typically you would do is show inheritance from the estate of so-and-so, and you might identify yourself, the estate that you're charging the inventory over, as a residual beneficiary or a specific beneficiary, and then just describe what you expect to receive as the amount from that estate. And if you receive more or less, that's something that gets handled over the accounting process.
Okay, so all these numbers add up to give us a total for part one. Okay?
That's correct.
And we want to keep in mind that part one will automatically total on the form depending on how you're filling the form out. And it goes towards figuring out what your bond should be whether you're bonded with surety or not. Let's look at part 2. So part 2 is kind of unique. We did a show about this. I want to call folks' attention to this about, joint accounts, payable on death or transfer on death bank accounts, joint credit union accounts, stuff like that. CDs, for instance, that are joint, or POD. So how are all these reported? And as we look at the screen of how we would suggest they be reported, what are we looking to capture here?
So you're going to show the same information you would show in part 1, except you're going to add both the type of ownership. So maybe it's joint ownership with right of survivorship, and then you're going to write down. Typically, you would write down who owns it. So you would want to show these. These are. It's important to identify these in the inventory process, but at the same time, you also want to make sure that they are not considered part of the probate estate when you're going through and reporting on assets to the court. This is really typically the only time you'll report on them, unless barring some other circumstance.
So what we learned in our show about joint accounts, this is a process to put people on notice about the existence of the accounts. These accounts actually could become subject to be claimed by the estate if they needed to pay the bills or taxes and they didn't have enough money, okay? But there are some special rules that govern that. But we did a show with 2 local estate attorneys that talked about this in some detail, which I would call people's attention to. All right, let's take a look then. Let's go to the next part, which is part 3. Now this is called Virginia Real Estate with Power of Sale. So part 3 reports all the real estate over which the executor has a power of sale. So how can someone determine if they have power over Virginia real estate owned by the decedent?
So the memorandum of facts that you receive from the court when you qualify will let you know if you have power of sale over any real estate. Typically that happens if the will specifically grants that power or the court identifies it for you. And again, it'll be present in the materials that when you go to qualify, it'll tell you, yes, you do have power of sale, or that'll say power of sale, no, at the bottom of that memo of facts.
Yeah, so you're referencing a memorandum of facts that you would want to get a copy of when you qualify, so you have that in your file. So that tells you a lot of information. Now, the type of real estate that's reported here would be real estate that's owned either solely in the name of the decedent, or maybe they own a fractional interest, like a tenants in common interest in a piece of property. Is that what goes here?
Correct, right. That's exactly it. So anything that you could sell and use the proceeds of in the course of the estate, that would be what you would report in part 3.
And so in part 3, we show up on screen, shows you how to report that. What kind of valuation should be reported here, Brian?
Typically, I tell people to use the latest tax assessed value. That's usually the simplest. There might be a good reason to get an appraisal if you think the tax assessment is unreliable or there's some other special cause or situation going on with the real estate. But typically, an appraisal is typically unnecessary, and it's good enough just to use the tax assessed.
Okay. So let's go. We got a couple more sections that all deal with real estate. Okay. So if I have Virginia real estate that has no power of sale, it goes in part 4. So these are the ones that your memorandum of facts say no power of sale over.
Right. Correct.
And,
yes.
And again, and this part, this does not count towards your bond. And again, you can, I guess, you would use a tax assessed value to report.
Yes, the same situation. You would identify it with the full address of the property and then use the latest tax assessed value.
Okay. And then lastly is part 5. This is all the real estate that's located outside of Virginia. Okay, so how much detail do we need to provide here?
So again, you want to show the address of the property, and then I think you had mentioned fractional share. So to the extent that there's the decedent owned a fractional share in a vacation home in another state, you would want to identify that as well and make sure that the value represented that fractional share interest also.
So in part 5, if you have real estate identified here, you are probably going to have to go ahead and do what's called ancillary administration in another state. Because we've done a lot of TV shows about ancillary probate in a number of states across this country. So I would call your attention to taking a look at the Probate Nation website, you can get educated about what needs to be done and if your property happens to be located in that particular state. Let's talk about, you were a former auditor, okay? So let's talk about, common auditor issues that we face with an inventory.
So the common auditor issues that I would see would be either kind of twofold. One would be the personal representative didn't properly identify the asset. So in the case of bank and brokerage accounts, they sometimes omitted the last 4 digits of the account number. But the decedent could own several accounts with the same institution. So you want to make sure you're clearly distinguishing them, and the account numbers do that. The other thing that would happen is brokerage accounts you might just see a total figure for a brokerage account without any underlying detail. And the commissioner's office really needs to see the underlying assets that make up that brokerage account. So we want to see each individual stock. We want to see the number of shares for that stock. We want to see the price per share of the stock at the date of death. And then we want to see the total value. Then the last thing that would cause issue for some folks is just the math involved with it. So calculating the right fair market value, the right price per share for each stock, et cetera. The math problems tended to crop up every now and then as well.
Okay, so we talked at the beginning of the show about mulligans. So I guess the commissioner's office will give an executor some opportunity to do some do-overs and fix problems?
That's correct. Yeah. So if you need to, the inventory section on the top of the form will give you an opportunity to say, this is the first time you're filing the inventory. This is an amended or restating inventory. You might need to file another inventory later that adds additional assets that maybe you found after the fact. So these all the issues that can happen and can happen innocently you are able to correct with either restating the inventory, and there's also some options to avoid restating the inventory and just do your mulligan on the accounting, as it were.
Okay. Now, let's just say the inventory is in perfect form, ready to be approved. Is there anything that could prevent the inventory from being approved?
Sure. If you're missing a signature, if you're using a copy of the signature, so you want to have an original signature on your certificate of accuracy at the end of the inventory. That's critical. And then if you're missing certain pieces of information at the top of the inventory, then that might prevent it. Also, fees, taxes, those things might also prevent it if those are unpaid.
And I've seen in some situations too, if you have to file an affidavit of notice with the probate office, and I understand that the auditors will check to see if that's been filed, and if it hasn't been filed, they will tell you we can't approve you until you get that filed. Is that true?
Right. So a big component of being a personal representative is providing notice to all the interested parties, all the beneficiaries, any creditor. So you file an affidavit saying, basically affirming that you did notify the interested parties that you're the personal representative, that you're, this is the value of the estate, et cetera. And that gives them notice that this is happening, and they can now start to engage with you. So if that's not done, then the commissioner will not approve the inventory, because they'll want to make sure that everyone has a chance to be aware of the filings as they happen and not after the fact.
So the last thing I want to cover before we go to closing comments is, the inventory on page 1 collects information as far as the totals of part 1 and part 3 in order to calculate the bond that you're supposed to have, whether the bond is with or without surety. If it turns out that the bond that you got qualified with is lower than what the value should be based on what the inventory is reporting, will that prevent the inventory from being approved?
It will not prevent approval, so you'll still get approval. What you will be notified is that you need to increase your bond, and that might prevent approval, or the lack thereof might prevent approval on future filings with the commissioner's office. So the inventory can still go, but the accounting, the commissioner might stop you from moving any further.
Okay, so those are things to keep an eye out for. Well, we're nearing the end of our time here, Brian. We covered a boatload of information and really dug deep into your memory banks of experience. Share some final comments, suggestions, pitfalls to avoid for folks preparing the inventory so they can move forward as quickly and as easily as possible.
Yes, I guess I would tell fiduciaries that are undertaking preparing an inventory to don't get caught up uh, over identifying tangible personal property and under identifying financial securities that the decedent owned. That's typically what happens. Just aggregate your tangible personal property. It's more likely than not worth much. And then make sure that you are communicating with the bank and brokerage houses and requesting from them the information regarding the valuation. Just make it easy on yourself. You don't have to calculate it yourself. You can typically have these institutions prepare these date of death valuation reports and send them to you. And that's true also of cash accounts as well. So I strongly encourage fiduciaries to do that just to make the reporting process that much easier.
Brian, thank you very much for taking the time today. Thank you for helping me with the preparation of this. You really contributed so much, and a great service to the folks in the community, and certainly to our Commissioner of Accounts from time to time that may lean upon you guys to help get people straightened out who aren't doing things correctly. So thank you very much, and thank you for the service to the community.
Thank you, Richard. I always enjoy being here. These are a lot of fun to do, and I'm just happy to be part of the process.
Thank you again for the time. For those inclined to prepare the estate inventory on your own, I think this show will provide you with some great guidance on how to do it properly. And if you make a mistake, the auditors at the Commissioner of Accounts office will give you some mulligans to get it right. But as Brian pointed out in his closing remarks, and I want to stress, if you get a letter from the Commissioner's office telling you of an error on the inventory, do not ignore the letter. Those mulligans can go away as quickly as they are extended. Deal with the issue promptly. And if you find yourself baffled as to how to respond to the commissioner, reach out to your attorney or accountant who have handled the preparation of the inventory for guidance. Friends, this brings us to the conclusion of our show. I hope you found it helpful. Replays of shows can be viewed on the Probate Nation website and the YouTube channel. Again, thank you for visiting with us, and until next time, be safe out there.